morning and good afternoon, gentlemen. Thank you all for joining. And to anyone watching, hi everybody. Welcome to the 4th episode of Utila's Stablecoin Builder Series. How stablecoins are powering Africa's payment revolution. I'm Lauren. I'll be moderating today's conversation. I lead Fintech Growth and Partnerships here at Utila. For those who don't know, Utila provides institutional-grade, non-custodial digital asset infrastructure for companies that need to move, manage, and secure crypto at scale. Today, we're focusing on something very real, how stablecoins are powering payments across Africa. Lucky to have founders and ecosystem leaders with us today who are actively shipping product and moving real volume. I'll briefly introduce our panelists, or better yet, I can do round robin, have you each say hello to the audience. Ryan, I'll make you start.
Yeah, perfect. No, and Lauren, thank you for having me. Definitely look forward to working very closely with the Utila team. So my name's Ryan Zega. I'm the head of structured finance at Aptos Labs. So at Aptos, we're a layer 1 blockchain focused on a number of global markets, and then specifically around payments and other financial products. Ultimately we see ourselves being the global trading engine, and then, are really, excited to kind of dig into some of the partnerships and products that we have in Africa.
Awesome. Paul, if you don't mind going next.
Hi, Lauren. It's great to connect. I'm Paul. I'm from Daya. I'm the co-founder of Daya. At Daya, we are a neobank for African businesses. Basically, what we do is we facilitate cross-border payment for businesses across Africa. We just started operations a couple of months ago, but we are already processing very reasonable volume. I know like the Utila team and Benzi back when I was working in venture capital. So I invested in Utila seed round back then. And yeah, we are currently using Utila for my current startup Daya. We recently graduated from the Alliance cohort and just closed our pre-seed a couple of months ago. So yeah, I'm originally from Nigeria. I have worked on both Nigeria and the US. So I have both like local contests and like international contests. And I just moved back from New York back to Nigeria a couple of months ago to build Daya.
Excellent. Thank you so much. And thank you, Mouloukou, for joining. I'll have Jude, if you don't mind, quickly introducing yourself, and then we'll do Mouloukou, and then I'll get into some of the questions.
Yeah, good morning, everybody. So my name is Jude, connecting from Johannesburg, South Africa at the moment. I'm the founder of Web3 Global Conference, which is a consulting company for a blockchain company. I also work with the Stablecoin Standard, leading the African initiative. Stablecoin Standard is a global industry body for stablecoin companies across the globe, and I'm helping them to carry out the initiative here in the African market. And I'm excited to be here, and I'm looking forward to this conversation. Yeah.
Excellent. Thank you. And Mouloukou, if you don't mind, quick intro. You haven't missed anything. We're just about to get into the questions.
Hi, everybody. My name is Mouloukou. Thank you so much for having me. I am the CEO and the co-founder of Mansa. Mansa is a global settlement network. We help fintechs across Africa, Latin America, and Southeast Asia settle their transactions instantly. We've done over $400 million in on-chain volume and nearly $200 million in payouts across emerging markets. Pleasure to meet everybody here.
Awesome. Thank you all again for taking the time out of your day to have this discussion with us. And for those joining live, feel free to drop any questions. We'll leave time at the end for Q&A, so keep any questions coming as we go. Again, I'll just kick it off with a general question. This one, anyone feel free to answer. It might be very interesting to sort of round robin, hear your thoughts as far as how is the stablecoin landscape in Africa distinct from other regions such as North America or Europe? And I'll round robin it. Oh, and Jack, thank you so much for joining. We also have Jack joining us from Checker Finance. If you'd like to say hello, Jack, feel free, and then I'll get going with the questions.
Okay. Let me just go for that. Thank you. Once again, pleasure to be here once again. So I think for me, right, the landscape, of stablecoin in Africa and that of North America and Europe. For example, in Africa now, we are looking at stablecoin is more like utility driven, right? So it's no longer a speculation driven per se. For example, we are seeing use cases like um, cross border payment, foreign exchange assets, right? Treasury preservation and remittance, solving some of the one of some of the biggest real financial friction in Africa. Now, when you look at North America or Europe, for example, you see that most of the adoptions, right, is mostly driven, maybe I would say tied to particularly trading, right, um, DeFi and capital market, right? So you see that the use case is there. What people value in Europe and North America is a bit different from African context because in Africa, people are looking at how can we use it for cross-border payment because most of the traditional system that people are using here is broken, right? And people are looking at how can we use it for remittance purpose, not like trade. And people do for trading anyway, but these are like the deeper part of it. People want to use stablecoin in Africa for remittance, for FS, foreign exchange access, right, and for cross-border payment. So basically, that is my take on that. Yeah.
Yeah, and then just to add to what Jude has so eloquently explained is that when you look at the context of the Western market versus like emerging markets, I think it's important to understand that in like when I'm in like America, I just use Cash App, right? I just send money in and then I receive it instantly. When I'm in Europe, I use SEPA, right? Like cross-border payments are like quite instant. But that system seeks to break once you send money to the African continent or like Southeast Asia or like Latin America. And it's usually like 10 to 7% fees. You have banking delays, sometimes the funds don't even come in. I remember sending a transaction to Indonesia, nobody could tell me like where my money is. But so if you flip it, stablecoins are, as Jude has explained, transformed into more of an economic lifeline because number one, it enables people to access dollars given the immense dollar shortages that there are in many of these countries. Number two, it's just a faster and cheaper way of sending money. All you need is just a phone. So if I have a phone, you have a phone, I can send you money to your wallet. And number three, it's incredibly fast, right? So, and if you're a business who has to do cross-border payments, stablecoins is honestly like the way. I think like the main difference as well is that it's not just used for trading, but it's used for everyday life to like trade economically with the entire world.
Yeah, as Moloko pointed out, I think like the most important point to point out is the dollar assets, right? I don't know if anyone has, okay, for those of us that live in Nigeria or Kenya, etc., like the local payment is very, very efficient, right? M-Pesa is probably like one of the fastest way to send money within Kenya or within East Africa, and the Nigerian local banking corresponding system is really, really fast, like it's instant. The issues comes in when you have to send money outside of Nigeria, when you need to pay your suppliers in China, when you need to pay your suppliers in the US, etc. Then you have to source those dollar assets. So what Theta found out very early when they moved in the emerging market was, oh, we can actually just provide like dollar assets, and a lot of people use this as a lifeline. One, for cross-border payment. Two, for saving, because like most of the currencies in this market are very volatile. And three, for just generally like storage of their wealth, so you don't lose like 20 or 30% of your wealth every year. And that's how Theta was able to build like one of the most profitable businesses in the world without necessarily giving yields to the users across those emerging market. So mostly it's like dollar assets that enables cross-border payment, and that's what we are primarily focused on there. For the local payment network, I think like the Nigerian interbank connection is much more efficient than even like the US wires and ACH. And I believe both in the US and Nigeria, when you have to like send money outside of the country, that's where like stablecoins are a much more efficient way of doing things than others.
Yeah, I have to agree with all the points that were made here. And then from a layer one perspective, we are, continuing to look for high quality stablecoin issuers that have, great utilization. So we've found that with, Tether, Circle, and a number of others. And then particularly within the African continent, that's where you have utilization for all the, things that were discussed, right? Cross-border remittances, actual sort of peer-to-peer transfers, and then we'll go downstream to, sign partnerships with, Yellow Card and others, right, to facilitate those, types of transactions, and then, look forward to continuing to do so in the future.
Excellent. Thank you all. And just to, again, thank you all for chiming in there. I'll move in to, I have some specific questions for each of you based on what you are working on. Jack, I'll start with you. So you have a moment to quickly introduce yourself. But my question for you after that is, in your view, what's the biggest hidden constraint in scaling stablecoin payments across African corridors? Is it liquidity depth, banking access, counterparty risk, or something else? And if you need me to repeat the question, let me know. I'm happy to do it, but it would be great to have you say hello to the audience.
Sure, thank you. Can you hear me now?
Yes, crystal
Amazing.
clear.
Thanks for having me. So I'm one of the founders of a company called Checker. We're the global liquidity network for stablecoins. We do a lot of plumbing work for regulated financial institutions for them to think about how to leverage stablecoins as part of treasury, FX trading, and global money movement infrastructure. And we work with Utila. Utila is an amazing partner of ours, and good to see many of familiar friends and faces on this panel as well. So within Africa, I think one of the most difficult thing is indeed counterparty risk. If you look at the history of FX providers, every 3 to 5 years, there's a couple of providers that either go bankrupt or they disappear. They run away with the money. Unfortunately, this is Africa, and so which is where you also see, especially in the parallel market, it's very difficult to assess the right level of counterparties, and I think that's one of the biggest barriers. It's not just counterparties. I think it's the same for fintechs as well. It's just that compared to other emerging market, perhaps the rule of law is not as strong or is not as strongly enforced. So I think it's stablecoin as a self-custody mechanism is a very interesting mitigation for that. And then I think the next biggest barrier for institutions to figure out is they have to shift the whole mindset. If they just want to apply FX to stablecoins, it's not going to work, because if they think in the FX world, one USD is one USD, whether that's USD trading with Citibank or one USD trading with Crown Asian Bank, it's the same USD. But you're going to have USDT on Aptos, it's going to be USDT on Tron, it's USDC on Ethereum. They act almost like different asset classes with different prices. You need different wallets. There's different settlement time. Sometimes you deposit into an exchange, it takes 1 second. Sometimes it takes 5 minutes. So all those are the nitty-gritty stuff that usually treasurers will blow the mind up, and they're like, wow, this is a really, really new world. So I think, so two things: counterparty risk and also being aware of the whole new world of stablecoins.
Awesome. Thank you so much for that well thought out answer. Sort of to piggyback off of that, Ryan, I'll come to you for a question sort of relevant to some of the things that Jack was saying. From a layer one perspective, what does a blockchain need to get right in terms of cost, throughput, UX, or ecosystem to truly support high volume payment use cases across Africa markets?
Yeah, no, that's a great question. So when we look at, Aptos specifically, right, our origins lie in Meta's Libra DM project, where Meta was trying to set up payment rails basically among Facebook users, right? So today we handle about $60 billion of stablecoin transactional volume a month. And then, we're the second largest chain that's utilized by Tether on USDT, and then, serve as a very prominent chain with a number of other stablecoin issuers. And the reason for that is speed, low cost, and then the ability to really scale up and offer, a high number of transactions per second, right? So the issuers that we work with to, Jack's point, right, the hope is that you kind of eliminate the counterparty by having best-in-class stablecoin issuers, and then as you move downstream with those other partners that have their own, underlying clients really across a number of countries, like Yellow Card, for instance, they can hopefully create a very streamlined experience for their, client base. And in the end, an Aptos, is really providing the sort of, tech from a layer one perspective. And then, we look forward to, doing so in the future.
Excellent. Appreciate that answer as well. And again, I'm going to round robin just some specific questions, and then I'll open it up to more general questions so we can have more of a discussion. But yeah, no, thank you, Ryan. That's very interesting. And again, Utila is very happy to be working with Aptos on all the things in stablecoins. Paul, I have a question for you specifically. Is Paul still here? Okay. I will move to you, Jude. It's your lucky day. I guess one of my questions, or I'm sorry, yes, Jude. What will it take? And again, this is a bigger question. What will it take for large African banks and regulated financial institutions in Africa to fully embrace stablecoins as core infrastructure rather than experimental rails? I know there's some in production, and as you mentioned, it's very different, from doing instant payments in North America or Europe. It's just a very different world. So I'm curious, what do you think it will take for that full embracement to come?
Yeah, thank you so much. This is very, very interesting question, right? So I think as of today, I think in Africa, as long as I can recall, I think countries like South Africa, Ghana, Mauritius, and Kenya, I think these are more like country now that that have legalized, that have clear regulations when it comes to digital asset and blockchain or cryptocurrency in general. I think Ghana just passed their own law last December, sorry. Then, so I think talking about banks and regulated financial institutions, how would they before I even answer for that, I think the stage we are now, stablecoin has moved from experimental stage, now to implementations stage, right? So because company are asking, somewhere like last year, and I spoke about 100 multinational companies. So some of them are asking, how can we? They are trying to understand stablecoins. Basically, more education is needed. Then, secondly, now they are asking question: how can we integrate stablecoin into our existing tech? They are not asking question: how can we experiment? So we have moved from experimental stage now to implemental stage. For me, stablecoin has a great product market fit already in African continent. Now, talking about how can bank and regulated financial institution embrace stablecoin fully. I think now, like I mentioned, about just four countries at the moment, I might be wrong, that have clear regulatory clarity at the moment. So I think more banks and more financial institutions will come on board once we start getting more regulatory clarities. For example, in a country like Nigeria, they are one of the top, they has one of the biggest volumes in the continent, but still yet now there is no clear regulation yet. So I think first of all, the more the industry grows and matures, and the more we have clear regulations, I think more I see some of this bank, starting to implement embrace stablecoin fully. Then the other thing I'm also looking at, is proving what I call proving risk framework, right? So this has to do with institutional grid custody, right? And transaction monitoring and the operational controls. I think the more this we have a proven risk framework, I think the more we're going to be seeing more institution and more bank coming on board. Then the other thing, I mentioned when I was doing, as I mentioned before, is interoperability core with core banking. For example, now bank that have been there for 50 years, 100 years, you're now bringing stablecoin for them. So obviously those kind of people, they don't want to change the entire tech. So we need to bring innovation that they could implement already into their existing payment and treasury infrastructure. So they're not looking to change everything, right? But how can they integrate it into their system that they have already? right? So I think this, when we have innovation like this as the industry matures, I think this will definitely help bank, and some financial institution to embrace stable coin fully and not looking at, for example, I think AFSA Standard Chartered, I think this bank they're already looking at stable coins. In fact, not looking, they're already into stablecoin. How can they use it more? I think recently in Nigeria they have local stablecoin CNGN. Recently in South Africa as well. I think they launched one of the stablecoin. I think even last month, if I'm right, right. And I think it's being custodied from I can't mention one of the bank in South Africa. That is to tell you now that bank are also coming in to custody some of the local stablecoins that is being launched. I'm also projecting that before the end of the year, we might have more local stablecoin. I think now we have just two in the continent or three. So we're expecting more countries like Rwanda, Kenya. I think I heard that Kenya on is on the pipeline, Ghana now, and maybe some other countries also having the local stable coin. Yeah. So thank you so much.
No, thank you. Great answer, and exciting times for Africa and stablecoins. And sort of a segue off of that question, a question specific for you, Mouloukou, with Mansa. And again, thank you, Judy, touching on a lot of great points. How does Mansa's real-time settlement infrastructure, which is powered by stablecoins, how does it bypass the limitations of traditional correspondent banking for regulated payment companies, for instance?
Yeah, so like the way, like I think like a lot of people like still don't understand is that payments is a capital game. If you give me $1 here, I need to give you $1 there. If you don't have the dollar there, we just like there's no trade that can happen. Money doesn't move like people think it does. Swift is a messaging system. Swift is just two banks talking to each other, telling them, yes, I have this, current, so like so on and so forth. It goes through a long chain of different like intermediary banks, right? So the way that you really get above this is number one, having speed to execution, and number two, having essentially a large enough balance sheet so you can bypass a lot of these like local restrictions. So at Mansa, what we do is we use our own balance sheet, and we keep it in essentially like USDT. And then whenever like there's a transaction, we instantly help settle that transaction for the payment company globally.
Excellent. That's very interesting. And as far as like the scalability potential of Mansa's model across, different African regions, is it vary across different regulatory environments, or is it pretty consistent across? I know that's a loaded question.
I think, because we are not the ones that do the final settlement. We are literally just the on-chain tech infrastructure. The final settlement is always done by a licensed payment company. So we haven't had any issues with essentially regulations with either collections or essentially like payouts, because the payment companies are actually licensed to be able to engage in these activities, right? But like what we have seen is we have seen like specific corridors where our liquidity has been used the most for example, Africa, China, Latin China is where we have seen the biggest volume, to be completely honest, and Hong Kong specifically. Like if you actually look where in China they've been sending it to.
Interesting. Very interesting. Sort of piggybacking off of that, a question for all of the wonderful guests on our panel today. Since I've hit you all with a specific question, how significant do and again, this is high level for anyone to answer, would love to hear most of your thoughts. How significant are stablecoins in addressing the challenges of high inflation and currency volatility for African businesses and consumers? Mouloukou, you mentioned, LATAM being a big market. Obviously, that's, stablecoins are very relevant there in high volatility markets. Just curious how significant you think stablecoins are in actually addressing these challenges. not all at once.
Yeah, no, and I could, kind of touch on a practical use case that we have within our own ecosystem. So we have a partner called Aptos Labs that does microfinancing within, mainly, the African continent. So they're actually, issuing loans that are, recorded on the Aptos blockchain. Typically, they're issued in USDT, and then they're received by a number of business owners really throughout the African continent that allow them now to have access to global capital markets, right? So for, those borrowers, they are looking for something that is, you know, I guess, a little, more inflation, resistant, right? Having sort of that stablecoin backing and then allowing them to really access global capital markets. And that particular issuer has originated, nearly $2 billion in these microfinancing loans, since inception. So great partner where, their goal, right, is to, issue these, inflation resistant, tools to borrowers that, may or may not necessarily have the same access to global capital markets, without a stablecoin product.
Thank you, Ryan. That's very helpful. Any thoughts from the rest of our panelists? I can always move on to another question. I've got plenty for you.
Okay, maybe I should just add to what Ryan have said. Yeah, so I think again, just talking from experience point of view, right? So country like Nigeria, maybe Ghana and Zimbabwe, so those kind of country that has high rate of inflation. That tomorrow the currency can go up, and tomorrow before you know it is down, right? So I think these are like corridors or country that has a very high rate of inflation. So I think the USD backed stable coin, right? That serves as a digital serve as digital dollar alternatives. And most of these businesses they will prefer to hold that because it doesn't fluctuate like the way their local currency do. And I think by doing that it is helping businesses to preserve values, you know, and also to manage import and export and reduce their exposure to rapid local currency depreciation and appreciation. Yeah.
Excellent. Thank you, Jude. And does anyone have any other thoughts to add there? If not, I'll move on to another question. Great. I guess, Jude, this is relevant to what you were saying. And again, I would love to hear the rest of the panel's thoughts. As far as, long-term demand for, how do you see long-term demand for local currency stablecoins in Africa, or will USD-backed stablecoins remain dominant? Jude, I know you mentioned the Nigerian stablecoin, and there's many others on the continent. So I'm just curious, what your take is on, the long-term demand there. Will it be USD backed, or will it shift over to more local currency stablecoins, which already exist?
Yeah. Interesting, right? I think for me, the demand for the USD backed stable coin will likely gonna be there. I think it's still gonna continue to remain the dominant thing in the near future, right? Because everybody here in the continent want to have access to dollar, like what I've mentioned in my previous question, like because of this high rate of currency inflation, depreciation, and all of that. So people prefer to hold dollar because of its stability, because of dollar stability, right? But I feel like in a long term as well, you know, if like um, a well non-USD or local currency, local stablecoin could grow. Like, for example, now we are seeing some use cases from CNGN, right? People can use CNGN to the demand is actually growing. Let me use the word is growing, right? And I think even as company like Afrexim Bank and the after as the continent scale where I'll be able to use this local stablecoin to carry out intra-African trade, right? And I think I should be able to use those stablecoins to make payment. If I buy stuff from Ghana, or maybe buy stuff from South Africa, I should be able to use my CNGN, right, to pay for those kind of goods. So I think this will actually we actually improve, the use cases and the demand for non USD stablecoin. But I think for now, the USD stablecoin is going to continue to dominate. Yeah.
Yeah, and then like if I have to add on that, right? Because I've actually invested in a few like local stablecoins personally, and like we're trying to do some stuff with them like on the Mansa level. I think like it's very complicated. It's not as simple as people think it is. Like I think it's incredibly nuanced, and I think the number one thing that these local stablecoins must work on is the infrastructure and the interoperability between their stablecoins and the local banking methods, and the interoperability between not only the local banking methods but the local payment infrastructure. If I cannot simply go from, let's say if I'm in Kenya, if I cannot go from my M-Pesa to my Kenyan shilling and then to my USDT on chain, then it doesn't really make sense, because right now it's already super seamless, right? Like right now I can already go from Kenyan shillings. I can use a market maker on the ground like Honeycoin or like Kotani Pay. I can move millions of dollars with no friction whatsoever. So the thing is, for these local stablecoins to actually make an impact, they have to fundamentally increase the ease of going between fiat to the on-chain version and then to the like USDT stablecoins, because otherwise it just doesn't work, right? But like I still like do believe that even if these local stablecoins do like have that infrastructure, that these local stablecoins will mainly be used to increase the ease of going between local fiat to USDT stablecoin. I think the US dollar stablecoin is still going to be the most dominant stablecoin, because if you ask somebody in Venezuela or in Zimbabwe what stablecoin they want, they're gonna say USDT. That's just the like truth of it, right? Unfortunately, nobody's gonna ask for a CNGN, even though I really like the convexity guys, right? But that's just the way things are.
Excellent. Thank you, Mouloukou. And Ryan and Jack, any thoughts here? I know this is, a big question across all stablecoins, not just, to local currency stablecoins in Africa. But again, everyone's asking the question, is USD-backed stablecoins, are they just going to remain dominant? What are you guys seeing? What's your take?
Yeah, kind of, similar to what I, mentioned before, right? We will, continue to look to integrate with additional high quality stablecoin issuers. And then, when we look at sort of what we're doing globally, we are involved with a number of monetary authority POCs and then other, use cases. A good example is within Hong Kong, we're working with the Hong Kong Monetary Authority on their EHKD Plus program, right? So that kind of originated as a CBDC focused, pilot program with a number of their partner banks. And then it kind of emerged right into more of a tokenized deposit, digital money, type of initiative where we're working very closely with, the likes of Hang Seng, DBS, and others on, issuing a tokenized deposit like product, right? That would be based on the Hong Kong dollar. And then, within Hong Kong, there is a lot of activity around, the potential stablecoin licenses that, hopefully will be issued sometime early this year to, a number of the other banks that have submitted applications. So, we're very interested in, pursuing some of those efforts, right, with other types of stablecoin issuances that are not necessarily solely USD backed, right? Because we could see a lot of, cross-border remittances, right, across the African continent and a number of, jurisdictions in Southeast Asia. And then I think a couple of the other panelists have even mentioned, LATAM and other markets. So yeah, I think that'll be kind of, core to some of our initiatives going forward.
Awesome. Thanks, Ryan. Again, thank you all for chiming in on that one. Thank you for rejoining, Paul. We'll have some questions for you. One bigger question, and again, I know many of you are working with lots of regulators, doing lots of things in that arena. But I would like to hear from each of you, if possible. What do you think are the most critical regulatory developments or uncertainties, excuse me, concerning stablecoins that African builders specifically are currently grappling with?
Yeah. Oh, sorry to cut you off.
No,
Do you want to
go
finish the
ahead,
question?
please.
My bad. Um, I need to listen, so like I'm going to like answer like this question first. I think what's very important, right, and like I've been very guilty of this like myself, is that I think we should stop looking as at regulators as our enemy. I think we should embrace the regulators, and I think the regulators themselves, especially in places like Kenya where they're so forward looking, actually want to create an environment where innovation thrives. And so like, and I think that, technology always moves faster than like regulation. So I think that we as builders should be a bit more cognizant of the fact that this is still very new to them, and that it's an education journey, right? It like has to go like both ways, and that we should embrace the like regulators, and like we should show them the path, rather than being in an antagonizing relationship like many of the crypto people had in the past with many of the regulators, especially in places like Nigeria.
Yeah,
Yes,
to add to that,
regulators
I'm
is the enemy.
actually
Interesting take. Any thoughts?
yeah, to add to what Moloko said, we also
Oh,
at
please go
Daya are
ahead.
like very regulatory. Okay. At Daya, we are also like very regulatory forward looking, right? The Nigerian government, the current government are very like conversant with crypto. There is something called the BSFE license, which is the Visual Asset Digital Service Providers license that they just started issuing. So like Quidas and Busha already have their licenses. We are in the process of also like getting that license. And what does is allows you to like do all of this with like support from the regulators. The current head of Nigeria Stock Exchange Commission, the SEC, is actually writing papers on DeFi and stablecoins, right? So they are like very, very forward looking. Like Moloko also mentioned, Kenya recently signed a BSFE license. Regulatory framework into law, and Kenya also and Ghana most recently passed one. So like most of the regulators in Africa are actually like much more forward looking right now than most of the regulators even in Europe and in some other continent. And because of that, like a lot of local talent and capital is pouring back into the continent. So yeah, like I think the regulation is much better right now than it is. So I remember back in 2020, like in Nigeria, the regulation was so bad, right? That's when I was at Helicarrier. And then the Nigerian government actually totally banned crypto then. And then at Helicarrier, we actually built one of the earliest local stable coins called NGNT, which was like one of the only way to actually open up on ramp in 2020 in Nigeria. Then I'm very sure Jude and probably Moloko will be familiar with the work that we did at Buycoins and Helicarrier back then. But yeah, I think the regulation since 2023 has been much better now. And like there's more of like a collaborative effort from the regulators than like them being your enemies like before. So yeah.
Thank you. I appreciate that. Any thoughts from the rest of our panelists? I know this is a very fun question when it comes to regulators, and we've gotten some interesting takes, especially you, Mouloukou. I like like the theme.
Okay, okay. Maybe maybe I should just say one or two things in addition to what Paul and Maloku said. So I think the biggest challenge I myself have seen so far in Africa, is fragmentation and ambiguity, right? For example, Ghana has a clear regulation now, same with South Africa on digital assets, right? So a company incorporated in South Africa or Ghana cannot do business in Nigeria. So there's a lot of fragmented regulation. It's not like the Clarity Act in US that once I comply with Clarity Act, I should be able to do business in some European countries, right? So in Africa is a very fragmented market, right? So that I have a license in Ghana and South Africa does not, I can't use the same license to do business in Nigeria. So if I want to operate in Nigeria, I also need to comply with the Nigeria local license. So I think this regulatory fragmentation is one of the biggest challenge, that I see in Africa, right? And I think along the line, as the intra-African trade, continue to materialize, and after and some other, you know, continental organization coming together to see how we can bridge some of this fragmentation, I think things will continue to get better and we can have more clarity. Yeah.
Excellent. Thank
I
you,
also
Jude,
think,
again. Oh, please go ahead.
so Lauren, yeah, I also think on that, Jude, especially the fragmentation of the regulation. I think like the ACFTA that is going live is going to help a lot. So it's called like the African Free Continental Trade Zone. And basically what that will help solve is like all of these regulatory mess. We want Diane is a Nigerian bus, we need a Kenyan bus, we need a Ghanaian bus. So like what the FCTA is trying to do is allow you to like operate in all of these countries using one single license, right? So it's easier for you. Think of it similar to the like European Union license, MiCA, etc. I know they are still like making some good progress on that. The African Union just passed it into law. So hopefully, like, let's see how this pans out over the next few months, and if this makes it so much easier to go through all this regulatory maze.
Got it. Thank you. We are getting some interesting questions in the comments. I'll probably leave those until the end, so I'll come back to you, Jack. As far as, again, with Checker, a lot of fintechs tend to underestimate the complexity of moving between fiat and stablecoins at scale. Not all, but some. What are some of the biggest misconceptions founders have when they go about building cross-border products in Africa, if any that you've seen or observed?
Yeah, I think so. There's a couple archetypes of founders who's building cross-border payments, financial products in Africa. I think that you have the B2B merchant-facing payments companies, you have the remittances, you have some sort of neobanks for contractors and diasporas. I think that's primarily it. And then I think for these three types of fintech archetypes, they need to figure out how do they move the money into Africa, or if they are helping exporters, how do they get the money out of Africa? So they need some sort of nexus with the African financial system. So they might go to the banks, and depending on which jurisdiction, which country it is, sometimes it's fine, sometimes it's not that effective. And then they might engage in parallel market. And so parallel market is a whole black hole, it's a whole parallel world that doesn't, you cannot just Google parallel market in Nigeria, parallel market in Kenya. How do I do this? You can't just ask GPT about it. So it comes with, I think the best way forward is work with operators, work with solution providers who've been in the space, who've paid a tuition. People get burned, money get lost, people run away. We've all learned that lesson, and so which is why now we know how to assess counterparty risk, for example. And after that, we'll be thinking about the actual, what are the different pieces of the puzzle that needs to be put together to actually use stablecoins and engage in parallel market. Wallet is one of them. Without wallet, you cannot even hold stablecoins. You will need KYT providers. You will also need KYC providers. And then you will also need some sort of, you will need some operational know-how. So you need someone who's actually clicking the button or doing the reconciliations. They need to know what's going on. They need to book the transfer. They need to do the trading. So that's where Checker comes in. We provide our customers who are financial services, financial institutions, we give them a single piece of infrastructure that covers the trading and money movement workflow. In a country like Africa, a lot of that is core and WhatsApp driven. I'm a neobank. I want to move money to via a counterparty. I'm going to call someone. I'm going to WhatsApp someone. What's your price? Done. That's the OTC format. So we understand that space well, and that's why we've also built integrations and infrastructure support for things like WhatsApp and Slack bots that trade, that help our treasurers and operations persona manage the reconciliations, manage the ledgering, manage the workflows. So yeah, so these are the common pitfalls and what I think fintechs should consider.
You've given them quite a checklist to get through, but a very, very important one. So thank you, Jack. I'm sure that will be very useful to many people out there thinking of building something in Africa for cross-border payments. Ryan, I want to come back to you with a question, and then I have, I think, one more specific, and then we'll get to some of the questions from the audience before we wrap this up today. So Ryan, as stablecoins power more cross-border flows in Africa, do you see opportunities for structured liquidity, on-chain credit, or yield infrastructure to emerge on top of these payment rails? And what does that next layer look like?
Yeah, definitely. No, we think, stable coins are really a critical layer for, cross-border remittance transfers and just, utilization of blockchain technology. And then as I noted previously, right, we have a private credit issuer called Aptos Labs, right, that's building on Aptos and has had a tremendous amount of success, right, with their loan origination program. And then, beyond that, we're looking at a number of other, institutional use cases and then other types of tokenized products that could be potentially distributed globally, right? We're, digging into tokenized public equity, digging into tokenized commodities. And then, the goal, right, is to create the right types of integrations and global wallet infrastructure to allow for all different types of users to have access to these products. And a lot of these products will, ultimately utilize, blockchain rails and then stablecoin rails for, payments.
Yep, perfect answer. Aptos is all over it. Thank you again, Ryan. A question came in from the audience, and it looks like it's specific to Mansa and Daya. So Paul and Jude, I don't know if you see it in the comments, but how are African-based fintechs like Mansa, like Daya, looking at the yield generation embedding in their offerings? It's a great question. Thank you, audience.
So we are already thinking of this at Daya, how we'll like provide yield to a lot of our users that have like a lot of idle balances on Daya. But there is also like a lot of there is a lot of like regulatory considerations when you start doing this, especially like in a market like Nigeria, where the CBN is very, very strict about you offering yield, whether you be a neobank or like a fintech, etc. Right? So to navigate some of that, we are doing like a couple of licenses that will enable us to do this. We are also like being very, very particular about security. So it's something that is in our roadmap, but we are not offering that right now because like we have to like navigate the regulatory maze, because you issuing yield in Nigeria is entirely different from you issuing yield to your users in South Africa.
Excellent answer. Hopefully that helps for those in the audience. Let's see. Jude, I don't know if you want to chime in. I know Mance is quite involved, but would be curious to get your thoughts as far as embedding, yield generation in their offerings, given the regulatory requirements or roadblocks, whatever you would like to call it.
Yeah, this is a very interesting question, right? And I actually agree with Paul. I think most of the local players in Africa, they don't have much of this option because of regulatory challenges, right? Because I think even in South Africa as well, I think the regulation is not really that clear on the um, yield bearing stablecoin or embedment. But I know that I think a lot of companies are already exploring that. If you don't have that, actually have limited knowledge. I need to do more research on this. But I know that company like I know for now, what I know now the differences between South Africa and some other African countries at the moment on stablecoin use cases is that I can go to any coffee shop in South Africa, right? And I can use my stablecoin link card. I can buy coffee. I can book flight with my stablecoin link card. This is not possible in Nigeria, right? For example, me as a person, I use stablecoin to pay for Uber, right? Uber Drive. I use stablecoin to order for stuff on Uber. My stablecoin link virtual card. So company like Pay, Rain, and some other ones. For example, in South Africa's case, Pay is working with a company in South Africa called Stitch, right? So what you do is that you have an account with Pay. Pay issue you a Visa virtual stablecoin link card, right? So let's say, for example, I go to a coffee shop, I want to pay for food stuff. So I scan because they have contactless payment all over South Africa, right? So in fact, it's even on my phone. I use my phone, I scan with my you can also add it to your iPhone wallet. I scan there, right? So what happens at the back end is that Pay gives stablecoin to Stitch, and the Stitch converts stablecoin to Zaha, and instantly as I'm scanning, that happens at the back end. So I assume it's pre-funded. So stable coins are collected. In fact, you can even spend Bitcoin. You can even spend Bitcoin, Ethereum. So they collect it, convert it to ZAR at the back end, and you can pay out in those places. But I think again, I spoke with somebody from Vala and Luno. I think most of these guys they're already having but I need to do more research. This is a limited information anyway. I know they have some yield bearing stable coins on their platform where you can hold stable coins, can be generating yield for you as well. But I think they have that already on Vala and Luno and some other local exchange here in South Africa. Like I said, South Africa is one of the countries in the continent that has clear regulation on digital assets way years back. So that's why a lot of institutions here is already playing actively and very well in that space. Yeah, so I hope this answers that question very well.
Awesome. Jack, Ryan, any thoughts? Yield, very relevant topic as far as how African-based fintechs or any businesses that you're working with in Africa, how they're looking at embedding yield gen into their offerings or, yield generation opportunities or solutions.
Yeah, so we power some international neobanks that have a good presence in Africa. I think when they look at yield, I think there's two things on a barbell. I think on the one hand, look, we all got burned from the crypto bear market, and to add in the fact that this is emerging market, which means users are generally more skeptical, and there is a shadow at the back of the user's mind. So counterparty risk, financial risk, and then also redemption risk. It's a very, very top concern. And then on the other hand of the spectrum is where users are now looking to get the best risk-adjusted return. So, we enable some neobanks to source yield as well, and these yield generally they do not come from DeFi. They actually just come from the traditional financial system. So, U.S. Treasury for USD denominated yield. We also see increasing more conversation about Africa local government bonds. So countries like Rwanda or Kenya. So especially for diasporas, Kenyans or Rwandans living in London, let's say London and New York, and they want to invest back home. And if they invest in local government bonds denominated in local currency, they make something like 10 to 12 to 15% in local currency annual yield, which is very attractive. So I think that is a very interesting trend. Obviously, it's good for the continent. It drives FDI, drives capital inflow back into the continent as well. So these are the trends that we're seeing.
Yeah, and then just to kind of add
Yeah,
on to that
also,
my apologies, from a layer one perspective, we have integrations with different, lending markets, right? Like Aave, Echelon and others. And then, that could be utilized, right, to provide additional yields for products like tokenized money market funds, tokenized private credit funds. And again, some of them might be jurisdiction by jurisdiction, right? Like BlackRock's Biddle money market fund, or, the variety of different Benji products that have been issued by Franklin Templeton globally. But that's, sort of another piece of, what we see to sort of generate that additional yield, maybe integrations with, counterparties like Aave and others?
No, that's extremely helpful and interesting. Again, from an L1 perspective, very interesting to get your take. And it looks like we are almost at time. I feel like we could keep going on this for a few hours, but I won't do that to you. As we wrap up, again, Ryan, Jude, Jack, Paul, thank you all so much again for bringing in all of your unique perspectives. I think it's very clear. Stablecoins are powering payments in Africa, and it's, some credit goes to all of the panelists today. You guys are shaping sort of what that future really actually looks like. So thank you all for sharing so openly. Thank you for anyone in the audience that joined us today. If you're building in this space, let's stay connected. Hopefully reach out to any of our panelists. Stay tuned for Utila's Stablecoin Builder Series. This is our 4th episode. We're going to continue churning these out. So give Utila a follow on LinkedIn if you'd like to stay in the loop on that. But again, thank you all so much for joining. Any parting words of advice to any builders out there, any new entrepreneurs that are looking to begin building with or adopting stablecoins in Africa? Just final parting words, and then I'll let you all get back to your day. Advice or,
Okay.
it might be. Feel free.
I think for me, any new company, any new fintech that is coming up, two things I would advise you: work with your regulators, with your compliance. I think I had one of the company from Venezuela was it shut down? Was it Dakota? I can't remember the name. Sorry if I'm calling them Jim, but make sure that you comply. Make sure you are fully in compliant, right? So the second thing is what if you don't have power for compliance and all of that, plug in already into an existing company that are fully. For example, you look at has like 20 license in Africa. See how you can work with company like that have license, plug in into them, and see how you can scale. Maybe along the line you can have capital and all of that to go for licensing yourself. Yeah. So thank you so much and cheers.
Cheers. Yes. And Paul, Ryan, Jack, any final parting words?
Yeah, we at Aptos, right, are really bullish on the African continent, and then, seeing sort of stable coins, not only proliferate, right, but some of those underlying use cases that I mentioned, right, private credit, blockchain native issuers, these are all things that we'd love to see within, our own ecosystem. So feel free to reach out, either via LinkedIn or email, after the panel.
Um, I think like stable coins probably found product market fit here and it will just keep growing, right? For example, last year the total cross-border payment between Africa was about like in total about both import and export was about $1 trillion and less than 200 billion was used on the blockchain and payment. So even if you're moving just like 30% of that, that's a lot of volume and a lot of opportunity. And I think as regulations gets better and the market open up and some of the more conservative companies start getting used to this technology, there will be a lot of opportunities. So I think now is the right time to come to this market and have some set food and get some like licenses.
Excellent. Jack, you want to close us out?
Sure, yeah. So, look, Africa is a very exciting market. I'm sure you guys have seen the news. Economists are projecting Africa to grow even faster than Asia in the next coming years. So, super exciting stuff. I think for builders who's looking to build in the space, 100%, I agree with what the fellow panelists are saying. Check with the regulators. Make sure that you're not going to jail. Do not break any laws. To be very clear. And then after that, if you want to build, if you want to make money, you want to scale your product, reach out to each one of us for what we specialize in, right? Wallet, go to Lauren, blockchain help, go to Ryan, liquidity, and on and off ramps, reach out to myself. There's different pieces of the puzzle that you need to put together, but that's the secret sauce. Once you put that together, you build a product that users want. There's a lot of opportunities to create impact in Africa fintech space.
Awesome. That was excellent. Thank you, Jack, for closing us out on such a strong note. Again, clandestine advice from our amazing panelists. And I hope that everyone enjoyed the discussion today. I know I did, and we'll see you for the next one. Thank you all again so much for joining. I'm